Hey everyone, my name's Zach and you're watching the ZVP Show. If you have any interest in personal finance, how to build wealth through real estate, or how to be successful at your 9 to 5 job, you're at the right spot. For the low cost of just giving this video a like, I'll help you unlock all the secrets to investing for a beginner. This is a limited time offer you won't want to miss out on. I'm just messing with y'all, but please smash that like button for the YouTube algorithm. It really does help out a lot and I appreciate it very much. The last few weeks have been a crazy one for the stock market. On February 12th, the Dow Jones reached its highest ever closing point of $29,551. Since then, it has plummeted all the way down to $25,864 as of March 6th. That's a 13% correction in the market. There's been a lot of uncertainty in the market due to COVID-19 and the impact on supply chains across the world, which has contributed to a massive drop in the market. But despite what the market is doing, now's a great time to start investing, so here's some advice for anyone looking to get started. The first piece of advice is to not get emotional. When you purchase a stock, you're essentially betting that that company is going to grow. And sometimes that price goes up and sometimes it goes down. Getting emotional about your investments will impact your logic and reason, which will cause you to make mistakes out of fear. Like right now, much of the sell-off is caused by a fear of uncertainty of how COVID-19 is going to impact the global economy. So many of the short-term traders are selling out and buying bonds, which are a less risky investment. Your emotions really serve you no purpose when it comes to investing and will most likely cost you money versus earn you money. The more logical the approach that you take when investing, the more money you'll end up making. The second piece of advice is to note that there's always some degree of risk. There's not a single investment out there that doesn't carry some degree of risk or a small chance that you might lose money. It really depends on what you're investing into, when you decide to invest, and how long you say invested for. For instance, when we look at the S&P 500 over a 6-month period, if you would have bought one share on September 9th at $2,978, after 1 month, you would be negative. Then go another few months and you'd be positive. Then go another few months and you'd be negative. And even safer investments, like putting your money into a high yield savings account, which nets 1.7 to 2.1% per year, is still at risk of inflation being 2.2% or greater, which will cause your money to lose value over time. And the third piece of advice is to not invest into anything that you don't understand. While this might seem like a pretty common sense piece of advice, sadly it's just not the case, and it causes people to lose money. You don't have to be a complete expert on what you're investing into, but you should understand where your money's going, how much the historic return for that investment is, and how much volatility you can expect. It's really not too hard to understand where your money's being invested, and you can answer most of those questions with a quick Google search. So be sure to spend some time researching so you don't lose any of your hard-earned cash. The next piece of advice is to think long-term. So when you go to invest for the long run and not for the short term. In the short term, there's far less certainty about what's going to happen. Generally, the longer you invest, the more likely you are to make money. This is because the longer you invest, the better the chance that you have of weathering any downturn in the market acting irrationally or drops in prices that eventually recover. Research done by the Charles Schwab Company in 2012 that analyzed the returns of the S&P 500 from 1926 to 2011 showed that over a 20-year holding period, it never once produced a negative result. In all reality, if you approach investing with a long-term mentality, you won't have to worry about trying to time the market, as some would say. It matters more about how much time you have in the market. Additionally, there are tax benefits to holding your money in the market long-term versus short-term. The taxes that you end up paying on the gains of your long-term investments will be significantly lower than those of investments that you held for less than 12 months, which are usually taxed as ordinary income. Most data and research shows that long-term investing is a far superior option for most investors or anyone looking to get started. And last but not least, the last piece of advice is to make investing a habit. To be able to reap the rewards of investing and get significant gains over the long run, you need to be consistently investing. This doesn't have to be something that you actively manage or put a whole bunch of time into, but it does have to be something that you invest a consistent amount over time every single month into. I did this with my company 401k, where each paycheck a certain percentage gets invested into the allocations that I've determined. This allows me to not have to think about it too much since my money's already invested for me automatically. And you can do the same thing with an individual retirement account to have money pulled from your checkings or savings account to be automatically deposited each month. And a little piece of bonus advice, the sooner that you can start investing, the better. If you invest $1 when you're 20 years old at a 7% return rate, by the time that you're 65, that $1 will now be worth 21. If you wait until you're 30 years old to invest that same $1, that $1 will only be worth $11 when you turn 65. This is due to compound interest. So that $5 mocha from Starbucks could potentially be worth $105 in the future if you had invested it versus spent it. As always, thank you for watching this video. If you liked the content or found it useful, be sure to give the video a like and also subscribe to the channel. I release content every Tuesday and Saturday.